If you close your ears to possible problems with your investments, you can make big mistakes. So, you may not always like what I have to say, you may not always enjoy it, but I hope that you'll find value in it. That's the concept.
Welcome back to StockPulse Silver Symposium 2021 in Coeur, Idaho. Got with me now Lobo Tiggre. He's the Independent Speculator. Lobo, appreciate you making the trip down and joining us in Coeur. Thank you.
Thank you for putting it that way. I am the Independent Speculator. I'm independent from my former employers. I'm also independent from all these companies here.
Yeah. So I saw your little talk yesterday. They called you Darth Silver and Darth few other things. So well, once you kind of get into why they call you that, how you see the overall maybe landscape of finance right now.
It may sound like I'm tooting my own horn here, but it goes to what we just said with the intro. I don't work for any of these companies. I work for my clients only, and I'm trying to get them the best information, at least unbiased information. I can make mistakes just like anybody else. But I work for them, not the companies. Even when I go see a company, I pay for my own travel, I pay for my own hotel. If I can, I'll buy my own lunch, right?
You're in no one's pocket.
That's exactly the point. So, that sounds all great. It's wonderful, independent research. But people don't often like it. They want, especially if they're long, if they own XYZ company, they want to hear me talk about how great it is. They don't want to hear about the potential clay heels or problems it might have. But you know what? I think actually, even if you're in that boat, you do want to hear that. You should want to hear that. If you close your ears to possible problems with your investments, you can make big mistakes. So, you may not always like what I have to say. You may not always enjoy it, but I hope that you'll find value in it. That's the concept.
Yeah. Well, let's talk some silver here first. We're at a silver symposium. Market's a little beat up. You can still argue silver and gold are probably at pretty decent levels, should be able to operate under these levels, but let's be straight here, selling may go away. They haven't come back for these guys. How do you kind of see the overall landscape?
So the big picture is, and people, this is one of those things people don't want to hear. They just want to hear prices going up, right? If it's not going up, everything's terrible. But this consolidation phase that we're in, and I do believe that's it. I do not believe last year was the peak for either metal. I don't think it's downhill from here. I don't think we're at 2012, 2013 all over again. I think we're in a consolidation phase. I think we're going to see higher prices. I think we'll see higher real prices in both gold and silver before this long bull cycle is done. So I'm very bullish. But still, just kind of stop whining for a while and look at these prices. $1,700, $1,800 gold is a fantastic gold price unless you're a crappy miner. If you've got a project worth having, sorry, can I say that on TV? If you've got a project that's worth having as an explorer, the PEAs, the feasibility studies, at these prices, even silver plus $20 is a good price for the better projects. The gold price is a great price for the better projects. So whether you're a producer or a developer or an explorer, this volatility, I think, helps investors to separate the wheat from the chaff. The companies that have the right stuff, they're holding on much better than the ones that maybe had less of a ghost of a chance. And I think that's market information, that's intelligence that we can use as speculators, as investors, to make better decisions.
So the buzzword around here has been patience, and that's been our theme, I think, forever.
Nobody wants to hear about patience. No, just want it to go up. But you know what? Mr. Market doesn't care what we want. He's going to do what he does, and what we can do, what we can control is not the market. We can control our own decisions. Now, so yeah, am I buying the dip? Yes. Am I willing to put more money in if it goes lower? Yes. Could I be wrong? Yes. But you know what? I am putting my own money where my keyboard is. And if I am wrong, then I will pay the price. So I'm not just telling everybody else what to do and walking off into the sunset, right? We'll see.
Sure. Well, you're bullish on metals. What else is hitting your radar nowadays?
Before we move on from silver, we're at the Silver Summit. I have to say specifically about silver, what I really like about the setup here is that it has not yet gone up as much as gold on a percentage gain basis. That alarms me a little bit. It's something different about the market right now, but it holds out hope for higher. Hope is not an investment thesis, but I do expect a higher silver price ahead. But more specifically, the conditions that make for these really vertical surges in silver are when monetary metals, investment thesis is pushing metals prices up for gold and silver, but there are supply issues. This was so in the 1980 or 79-80 when the Hunt brothers did their thing. This was so in 2010. And so remember that silver is a byproduct. So if you have economic concerns, like say the next COVID shutdown or whatever, and industrial metals supply is reduced, but for the same reason fear goes up and the monetary metals price goes up, then you get this squeeze. That's the real silver squeeze. When you get supply constraint, but prices going up, silver can go nuts. And I would, not promising that, but there's that potential in silver, and that's why I particularly like silver. One of the 2 stocks on my shopping list right now is a silver stock, and the other one is a uranium stock, which gets to your question. What's the other thing? You can't ignore uranium right now. It just went from $30 to $50, a truly parabolic change in that market. Now it's given a lot back. So people are wondering what to do, what's going on. We could say a lot about that. The important thing to take away from this, I think, is that uranium was already in a multi-year, really 5-year bull pattern. It was very volatile, 2 steps forward, 1 step back, and those steps back were scary. But the bottom was in late 2015, early 2016, and uranium prices have been rising ever since then. And the proximal cause is Sprott, with their new uranium fund just basically hoovering up all the cheap pounds that were on the market, so there's no more cheap pounds available, or very few, and you could just see that. What happens now? I don't know, it's interesting. It's correcting hard, and that's been the pattern. So I gotta say, when it was going like this and all the cheerleaders were, in the echo chamber, yeah, it's going straight up. I was saying the 2 steps forward is the time to take profits. The 1 step back is the time to buy. We are experiencing a 1 step back. I don't know where the bottom is. I don't know how low it goes. The step backs in the space tend to be pretty big. So it could go significantly lower. But I will say that if you missed the uranium boat completely before, we already have enough correction that it's worth getting in now. Averaging down or buying more if it goes lower. But the story is not over. This whole Sprott thing, I don't know what happens with that, but that was on top of this already multi-year, and the fundamentals here are very strong. This is one of the things that even with the price rise, it's still not where it needs to be to incent new mine supply, and demand is growing. The Chinese and others are building nuclear power plants left and right. It's not like the Back to the Future movies with the Mr. Fusion where you can pour a beer and a banana peel in there and you get energy out, right? You have to have uranium. It's not substitutable. So fundamentals very strong, and I do see the correction that we're in and gathering strength and being a buying opportunity.
How do people follow you?
IndependentSpeculator.com.
Social media too, or you just kind of stick with the site?
Well, actually, thank you for asking. I do various social media, but the main one is Twitter, because it makes for short conversations. People can't ask me page-long questions, and it's easier to answer short questions. And it's daily, right? I comment on daily developments in the space. My handle is @DueDiligenceGuy. So, and by the way, I refer my clients to also, between editions, between publications, follow me on Twitter, because I'll comment on what's going on, and then you can connect that macro thesis to our specific investments in the newsletters.
Man after my own heart, due diligence, my favorite term. It's Lobo Tiggre, he's the Independent Speculator. Lobo, thanks for taking the time.
Thank you.